All right, welcome to a recorded episode of This Week in Crypto. This week, Maxim will not be with us this week or next, but I wanted to give a quick update in addition to the two other market updates I did this week with guests on where we're at with crypto. And yeah, it's been a bit of a bloody week. I believe our second biggest retrace we had all year, excluding the first week of April, where it was a big bloodbath from Trump's initial tariff announcements. And, you know, history tends to repeat itself. We did have a big temporary tariff announcement be a big contributor to this downfall. So even though we recovered temporarily, we're still seeing the effects of some concerns that some tariffs can come back. Some are arguing it's just the tariff thing was just kind of a boost to the bear cycle that is now impending upon us. There's a lot of people out there that are quite negative on crypto, and we'll get into some of the stats on that and social volume. But I wanted to start by just looking at some of the overall percentage changes we've seen over the past week. Beginning with this down here, we see the market cap overall in crypto dropping by a whopping 16.1%. A lot of that, of course, is going to be contributed by Bitcoin itself, which dropped a little over 10.5%. The market cap is still sitting at about $4.6 trillion. So, you know, from a long-term perspective, still a ton of money in crypto. People who are exaggerating and saying that crypto is going to zero and stuff, you know, we've got the numbers to show that we're still in a pretty comfortable spot. But 16% decline in 1 week is one of the larger ones you're going to see. Even going back to 2020, I believe it's a top 10 bad week in crypto. So on the other hand, we have screener volume that's indicating that the overall trading volume has gone up significantly. And this happens all the time whenever there's polarization in the markets and the bulls start getting more bullish and the bears start getting more bearish. More trades happen. With volatility comes more trading, and we're certainly not seeing any lack of that right now. I'd actually be more shocked if people were kind of sitting on their hands with all of this trading volume opportunity arising, with prices dropping to, you know, as low as just below 103K, depending on the exchange. I saw anywhere between like 102.7 to 103.1 during that big drop just about a week ago on October 10th. But volume is up significantly. Looking at some of the individual coins, I talked about Bitcoin being down 10.5%, Ethereum down 7.8, Solana 14.8, XRP big drop at 16.8%, Dogecoin huge drop at about negative 23%, Cardano negative 21%. We see SWI over here down almost 28%, Polkadot down 29%. Aptos looks to be the biggest dropper among the large to mid market caps at minus 36% in the past week. Interestingly, social volume has barely moved for Bitcoin compared to the previous week, moving up just about a 0.5% in overall discussion rates. Ethereum, on the other hand, up 9.5%, so it's getting a bit more attention. Solana, big drop in social volume as people continue to distance themselves from what has been a bit of a boring week relative to others. Cardano down about 7%, Dogecoin up 13%. Not too much to say about the social volume. It's kind of scattered all over the place with this big bloodbath in price going on right now. Now, if we compare what Bitcoin and to an extent crypto has done, so yeah, gold's price here, if you can see the top here at 43.88, it's dropped all the way back down to 42.61. That's about around a 2.93% drop just in a couple of days here, with today being a very large drop. So the gold overall line still looks pretty good. The S&P has dropped a bit, but Bitcoin has been the big loser. And we've seen a drop of, if we go to the very bottom, about Yeah, 17% drop before a bit of a rebound, about a 2% rebound in the last 12 to 16 hours or so. But Bitcoin's trailing quite a bit. You can almost see an inverse correlation here between gold and Bitcoin, which is super rare. So they're kind of mostly going in their own directions for most of the past 5 years, really, since COVID became a big social factor in the economy and how prices are fluctuating. So I get the impression that there are a lot of people kind of hedging against the economy when things are looking scary, and when things look a little bit better or job reports improve, inflation looks a little better. We'll talk about Fed rate cuts here in a moment. That's when people get a little more confident and they sell their gold and they buy Bitcoin, or they buy equities, and Bitcoin and the S&P 500 go up as a result. So I think the fact that gold has recently been reaching new all-time highs is a sign that overall institutions are concerned about some economic collapse, not an entire collapse, but one that's big enough where it can really shock the world. I'm hearing some 2008 comparisons due to bad bank loans and things like that. Of course, '08 was more about real estate and properties, but regardless, there's some concern about some economic collapse, and it isn't just the U.S. There's concerns all around the world about the widening gap between the wealthy and the poor. And here we can look at some of the social volume going on for some key economic discussions. Of course, we'll lead it off with the one that contributed heaviest to this past week, which is the Trump temporary announcement of 100% tariffs on China, followed by a quick rescinding of that about a day and a half later. You can see when it first happened, Trump and China, Trump and Xi, Trump and tariff, Trump and tariffs. Those four key combinations are being factored into this social volume here. And you see how social volume exploded on the 10th. And it's, very gradually just moved back down to now really neutral discussion. It's almost non-existent once again. So it's almost off of the stream of consciousness for the crowd once again. But I wouldn't be surprised if Trump stirs things up again. It's your opinion whether it's for legitimate reasons because he's trying to improve the American economy, or he's doing it to manipulate the markets. I've seen both sides, and I've seen tons of discussions across social media. We're not going to weigh in on that. Our opinions don't really matter. But what I will say is this topic is very much a crowd-sensitive topic that is going to continue to rock the markets whenever the word tariffs or tariff or China or even another country like the UK, any country where there's tension between the US and them is going to cause, potential tariff concerns to come up, and that will have a negative impact on crypto and the S&P 500 whenever it does. As I mentioned a few minutes ago, the Fed rate cuts is on people's minds as well. The next one is coming up in about 12 days, 11 days. I believe it's the 28th and 29th, right at the end of October here, where we're going to hear whether there's another 25 BPS drop. And if there is, we are likely going to see a bit of a boost, just like we theoretically are going to see whenever there's a BPS cut like we saw here, which is interesting because this was such a foregone conclusion that the boost happened prior to the rate cuts here in mid-September. And then once it happened, it was kind of a buy the rumor, sell the news event where we, yes, eventually got the effects of it and reached a new all-time high on October 6th. And I do think this was largely attributed to those rate cuts. But just like we saw with, the Bitcoin ETFs being confirmed, the Ethereum merge back in 2022, so many different things where we know it's a foregone conclusion. Even the halvening that happened last year, or the Bitcoin halving, some people call it the halving, what have you. There tends to be a price boost leading up to the event And then when it actually happens, all the FOMOers jump in and they're like, oh, look, it's official now. I'm going to buy. But it's too late at that point, and you end up seeing a retrace that confuses a lot of people. This is completely normal. And then once those FOMOers end up saying, oh, the Fed rate cuts meant nothing, I'm just getting scammed by all those KOLs who told me this was a big deal, that's when you actually start to see the true effects of it, which is so interesting to me. And it'll always be the case when it comes to these kinds of things. So you'll start seeing predictions coming in on Polymarket. I would assume it's going to be in the 90-something percentage points in terms of probability that we get rate cuts again. We'll see what it says. Polymarket tends to be a pretty impressively accurate gauge for what ends up happening to the rate cuts and rate rises as we've seen the last few years. So if that happens, you might see something very similar, or you might see the opposite, right? The crowd tends to react to whatever happened last. And if they think there's going to be rate cuts again, maybe we get a bit more of a neutral or even a negative reaction because they're like, oh, it's already baked in. And then this time you see the actual moment that it gets announced by Powell and the Fed, and then we go up this time. So pay attention to whatever direction the price is going prior to the news being made official. And usually when the official moment happens, that's when you see the sudden 180 in prices. And it literally has happened the last 3 times. It wasn't just the last time in September. You see the rate mentions on the 22nd. And then I can't tell if this was the exact moment here in late July, but I know there was a July, August, and September one. And the July and August ones resulted in no rate changes, whereas the September one resulted in our first cut in quite some time. So enough about that. I think it's going to be the next big topic that impacts crypto. Assuming there's no surprises, there probably won't be as big of a needle mover as we saw in September, though. Another thing I wanted to mention, the overall discussions related to Bitcoin's price and predictions coming in, we see the blue bars mentioned are associated with any price between 50K to 100K in $1,000 increments. So 50K, 51K, 52K, etc. All of those combined are mentioned in blue if they're in relation to Bitcoin, BTC, or the cash tag BTC. You can see the moment where blue bars spiked here right after the tariff announcements were temporarily made by Trump, and then they went down as soon as he rescinded them just a day and a half later. But when you saw the blue bars go up and everyone's starting to predict for sub 100K Bitcoin, that's when you see the bounce. And then when they got confident after the bounce, you can see the blue bars went up, went down. The red bars representing 150K to 200K Bitcoin predictions went way up, or at least they stayed high. That's when price started to go back down. And then all of a sudden, just about 8 hours ago, we got the largest blue spike we've seen in well over a month here. Tons of people predicting sub 100K, and now we're starting to bounce again. So this is happening in real time. I'm not going to say we're now going to bounce right back to 115K, but history usually shows that with really prevalent low price predictions from retail comes at least a mid-sized bounce that, you know, in my opinion, right now, based on the data we have, looks pretty good for, you know, at least a mid-sized rebound that can carry us till past the weekend, maybe Monday or Tuesday. And then we see what the latest news is, or if retail gets greedy again. Obviously, as you know, they tend to get a bit more quiet on the weekend. People are off doing their own things, but I'd be paying very close attention to this chart, and we've linked it on social media. We talked about it recently. You'll find it in our insights, and it's pretty easy to recreate, even if you'd like, with your own price mentions. You can even do it for Ethereum. I won't show it here on the video, but you can do, you know, 1K to 3K mentions related to Ethereum versus 6K to 8K mentions. Basically, just take a range that's well below where the price currently is and well above where the price currently is. And you can see just how fearful or greedy the crowd is getting whenever they talk about the actual prices that they're anticipating for these respective coins. Now on to some main metrics here. On-chain wise, we did see a pretty big milestone in transaction volume. For a couple days here, we saw it get well above $40 billion. Yeah, 45 billion on the 13th, 44 billion on the 14th, and then it's dropped off a bit. So transaction volume's been flowing. You can see typically when there's these big spikes, it can cause some reversals. So this one kind of happened on the downturn. I wouldn't be surprised if we get a little bit of a boost as a result of all of the increases in volume and transaction volume on chain. In terms of network activity, circulation, it looks like it's picked up a little bit. Network growth is pretty neutral. Daily active addresses are pretty neutral. MVRV, very important one to check in on. The 30-day MVRV has actually gotten about as low as we've seen over the past 6 months. The last time we really saw 30-day get below about -6%, like it, essentially is right now. It's at -5.8. That was back in mid-June. This was when the Israel, US, Iran tensions were peaking and people were fearful of a potential war breaking out or some extended crisis. That turned out to not be as serious as we thought. Obviously, any topic resulting in casualties is serious. We're not going to get into the politics, but in terms of the crowd's reactions, the fear ended up being overstated, and we ended up going on a huge run all the way to a then all-time high, and then another all-time high, and then another all-time high here on the October 6th. So it's good from a mathematical perspective to see very negative MVRVs. You can see when the tariff fears were at their peak, we got to, what is this number here? I'm trying to check that top left bubble. I think it was just under -10%, it looks like. And then -6% is where we're at now. So as long as the orange line is below 0, that means you'd be buying when others, on average, are in pain relative to the historical zero-sum average of all the trades going on in Bitcoin. From a long-term perspective, we're still just above 0%, sitting at about plus 3.8%. But that's about as low as we've seen since prior to this initial mid-April rally after the tariff started to ease up. So it's good to see that long-term wise, average traders are pretty much sitting at neutral, and average traders on the shorter term are sitting in the negative range. That indicates that you buying in now is much less risky than we have seen in a long time, going at least back 6 months here. So it doesn't mean we can't retrace more. That's happened many times, and then we see like something crazy like -15% on average for 30-day traders. That would be a big opportunity zone if it gets that high, or that low, I should say. We also have this MVRV divergence chart, which we haven't checked out on stream or on a video in a while, but all of these green bars mean, especially these altcoins, are in an opportunity zone compared to their historical averages. Due to all of the midterm, in this case, we're just looking at like 30-day, 90-day, or like 30, 60, and 90-day average returns and combining them all together and how far they're diverged from like the normal zero-sum game. All of these green bars indicate we are at an extreme underbought territory. So it's going to be a lot of obscure coins that have dropped the most. Eternity Chain, Linear, I see here. Viberate is one that's way underbought compared to normal. I also see Singularity Net, High Street, Frax Share, DYDX, Coin98, Maker, Mantra DAO, just to name a few. Do your own research about these coins. There's some that have an argument for longevity. Others may just be slowly declining out of existence, and you need to make sure you know a little bit about them rather than just blindly buying them because others are severely down on those assets. Okay, so besides MVRV, one thing I wanted to point out are there are quite a bit of shorts going on. When we look at Binance here and BitMEX, especially Binance, these are some of the biggest red bars we've seen, indicating they're betting against the price of Bitcoin since late April, early May here. And we saw what happened to all these shorts. They got liquidated like crazy on this big run up in early to mid-May. So generally, funding rates are always prone to get liquidated. So when there's a lot of shorts, those shorts get liquidated and add rocket fuel to potential price action upward. So this is a very good sign that at least on the short term, the crowd is betting against the price of Bitcoin. Also check out whale transactions, definitely starting to peak quite high here on October 13th. We saw 5,572 separate $1 million or more transactions. That is massive. That's about equal to what we saw here right on July 24th, where we got to 5,627, and that actually resulted in a top. So, you know, this doesn't mean that whales are dumping or accumulating. We'll check that out in just a moment. But the 100K plus and $1 million plus overall amount of whale transactions are rising in number. Also, last thing I wanted to mention on this template is that mean dollar invested age still looks pretty good. Lots of dormant wallets are moving their coins and causing more and more of those older coins to come back into circulation to allow them to be traded. We saw that trading volumes up almost 25% in the past week. The fact that we're getting more and more coins moving back into circulation just aids in that trading and the ability for coins to be cycled, which is generally a good thing for the long term in crypto. Supply and exchange is also staying low as well, which does make an argument for less risk of a sell-off. All right, I mentioned accumulation and dumping amongst the key stakeholders. So this is the 10 to 10K BTC wallets collectively and how much they're holding over the past 6 months. Generally, when they're accumulating, prices tend to follow. When they're dumping, prices tend to follow. Look at this more as the long-term indicator, not a daily one. There's plenty of moments where, you know, whales can be accumulating, but price goes down in a given day. But if you give it a couple weeks, prices generally catch up with what the smart money, high capital key stakeholders are doing. Overall, if we just go back to August 27th until now, they have accumulated a total of about 97.3K Bitcoin, but they did dump a little bit over the last couple days during the concerns about the tariffs, and we have dropped significantly since those tariffs happened. Even going back to the all-time high, it's down about, price is down about 14% now. They've dumped about 12,720 Bitcoin over the last 4 days. Not a serious concern, but, you know, watch for a sustained dump like we saw between mid-July and mid-August. That would be very concerning. I'm still not really concerned whatsoever, considering the 6-month trend here shows more and more accumulation of key stakeholders just adding on to their bags. They're collecting many of the coins that are being dumped by some of the small traders, which is interesting because the very, very small traders have also been accumulating since mid-July. It's really the mid wallets that seem to be dumping the most. You can see the 0.01 to 10 BTC wallets on this yellow line. If we go back 6 months, they have dumped about 0.27% of the entire supply and about 1.6% of their bags. So that's where the smart money is definitely accumulating the most. And about halfway through this 6-month cycle, even the very small wallets are accumulating along with them, which is kind of rare. Usually they're going a little bit inverse to each other. All right, a few other things. On the trending stories tab, which I recommend you check in on as kind of your home base on a daily basis, it's a great way to gather information on what's driving markets. The trending stories right now, it's being led by Peter Schiff's recent praise of gold. It's weird that it says there was a 34% Bitcoin drop. I didn't see it get nearly that far of a drop, but for whatever reason, it's citing 34%. The gold versus Bitcoin debate is very high right now, considering gold is hitting all-time highs while Bitcoin is going the opposite direction. They're, as we saw earlier, they're going kind of inverse to one another right now, even though today has been a nice rebound, slight rebound day for Bitcoin while gold continues to drop. I think that people are overall beginning to hop on the gold bandwagon because it's been on such a great run. And then, as I mentioned, the regional bank stocks plunging due to bad and fraudulent loans, sparking fears of a credit crisis reminiscent of 2008. So this is a big topic, and it could gain steam over the next couple of weeks. We'll see how it kind of intertwines with the Fed rate cut likelihood at the end of October. We also have been seeing a lot of people talking about the whale accumulation of lion and some of the other whales that are active. I also saw some discussion about whales in Bitcoin that were going very short over the past week and now flipped to long. So that's, whales are always going to be a discussion. Ripple Labs acquired G Treasury for $1 billion, marking a major expansion into corporate treasury and liquidity management. So that's a little bit of news for the Ripple and XRP community out there. And then there's just a general Friday fear surge. We see still mentions about the $19 billion liquidation from last Friday, the Fear and Greed Index, which is often cited by a different website, looking like they're citing the greed going from 64, which is above the 50 even mark, all the way down to 22, which is well below the 50 even mark. And our metrics, of course, show some of that as well, with 50K to 100K BTC prices being mentioned at a pretty increased rate. So that's just the top 5. You can go through the full list if you like. Make sure you're on your Sandbase Pro membership to see all of the full stories here, as well as trending words, trending coins, or you can open up a 2-week free trial and get access instantly to all of this stuff. One thing that's free, regardless of whether you have a membership, is this Bitcoin ETF inflow outflow dashboard. You can see here, just as we talked about last week, this huge spike of over $1 billion of inflows looked concerning to me based on the fact that some of these other high spikes near that level or above that level very often are correlating with tops in the markets. So this one was no different. We saw it retrace right after, and now we're getting the biggest outflow day yesterday since it looks like July 31st, technically August 1st, because there's a 1-day delay on these date tags here. So this was yesterday, and well over $500 million worth of outflows occurred, which is quite significant. It means that people have kind of changed their tune so quickly from just 11 days ago. And I'm very interested to see if this outflow trend continues, because these often correlate with bottoms, just as we saw here. Nice bounce right around the bottom, around 114K, that eventually got us to that all-time high. Another one close to a bottom here. This one was a perfect bottom here on September 26th. And we also see several instances of that around early March, which was when there were concerns that Trump's presidency equated to bad performance for crypto after people were FOMOing so much in after he was inaugurated. So little glimpse at what's going on with the ETF inflows and outflows. And last but not least, I wanted to highlight our Whale Watcher crypto deposit radar. This tells us all of the transfers that are exceeding $1 million in value for many of the altcoins out there. And we see CyberConnect about 11 hours ago saw $1.8 million worth of their asset, or 3.13% of the entire market cap, moving to centralized exchanges. Succinct saw two separate big transactions, 2.5% and almost 2%, moving to exchanges. MX Token, Plume, Pax Gold, Eigenlayer, Pax Gold again, Artificial Superintelligence Alliance, Pax Gold again, and $2 million transactions in Morpho, just to name some of the top market cap moves for some of these small to mid-sized altcoins. Especially pay attention to Pax Gold, because Pax Gold's been on a huge tear in terms of its price. If I just switch over, we should be seeing a bit of a correction based on some of the recent metrics that have been showing up. Let me unlock this. There we go. Get rid of that trend line that's there for no reason. Yeah, so just as you'd expect. So deposits are just coming in over the past 24 hours, and it has dropped about 5% after being on just an enormous tear since mid-September, peaking at about plus 22%, which it seems like it'd be bigger than that actually, but Pax Gold's a bit of a slower moving altcoin, sitting at about number 57 on the overall market cap ranking. But at least it's been a very consistent grower for the last 3 months or so, or 1 month or so, compared to a lot of other assets out there. So this retrace is no surprise, because the FOMO has really been peaking. If I go to social volume, you should see a lot of high spikes. Yeah, right at the top. What do you know? So this is where everyone starts to pay attention to Pax G, and then all of a sudden it drops off a cliff right when retail starts to buy it themselves. It's a tale as old as time. So that'll conclude the market update for today. Hope you enjoyed it. We'll maybe stream next week, maybe do another recorded video. Let me know what you guys prefer. Sometimes we get people that are asking questions during our live stream, so I understand the benefit to that. But we'll kind of weigh in and leave it up to you if there's some strong interest in us streaming. One more week without Maxim, I'd be happy to do so. But thank you all for watching to the end. Really appreciate your support. Like and subscribe as always. And thank you to all of the team members at Santamin for continuing to put this great platform together to allow me to analyze markets and go through so many awesome tools here. Thank you all. Have a great weekend, and we will talk to you soon.